Hi friends, welcome back. Want to give you an update on what's going on in financial markets today, plus the top stories, and want to keep you informed. So let's just jump right in. Headline, S&P 500 suffers its longest slide since January, and this sort of downward trend has been continuing. This is what was moving today. Actually, Nvidia was one of the big losers. And I've been mentioning this, I called Nvidia top. It looks like I'm probably correct, but we'll see, we'll see. Other things that Microsoft was down, Apple down, Amazon down. Tesla, surprise, surprise, was also down. They had some wild news regarding Elon Musk. I made a separate video on that. Please check that out. Utilities are up a bit, healthcare, and some of the financials. This was actually a big story regarding the semiconductor industry. ASML may have a bit softer earnings that disappointed Wall Street. And the question is, does this sort of predict a future of slowdown in the semiconductors? Now, I don't pretend to be an expert on ASML, but I can read. They're one of the, I guess they make these lithography machines. If you guys are experts in this, you can let me know. But essentially, you use these machines, again, the only companies that make these things, to build chips, okay? And so then their customers, ASML's customers, that is like Samsung, Taiwan Semi, Intel, etc. And if they're slowing down, does that mean the whole industry is slowing down? And one of the things I mentioned to you guys with this kind of industry, it's cyclical. Maybe make it really simple. So, imagine you go out and you go buy a couch, right? You upgrade your couch. You got this new couch you put in your house. And the question I pose to you is, how often do you need to buy a new couch, right? That's why it's cyclical, and it's like not that often. However, right, with the chip companies, yes, you need to upgrade your chips more often than your couch, but it's the same kind of thing. So, for example, lately the AI stuff has been all the rage, and all these companies are like, oh my God, we got to catch up because the other companies are spending more, etc. Eventually, companies can't spend anymore because essentially all this spending on all this new chips and all this excitement is betting that the money's going to be there in the future. But what if it doesn't come there? And also too, what if you run out money today? And so this is sort of why I think it's cyclical, because I don't know necessarily that they convince you to upgrade all the time. Now, the Nvidia bulls, I'm showing you a Nvidia chart here, they would say, well, Chris, you're wrong. Yes, companies are upgrading and they're getting all this new stuff, but this is only beginning. Right? Everyone's going to be doing it, and I'm not so certain. Plus, again, I question the are they going to be upgrading all the time, all day, every day? Now, markets tend to get hyped, right? It is what it is, and markets can be irrational longer than you can be solvent. And but like I said, I called top here. That was right around there, and we are on a downward trend. I think Nvidia's down like by 12% or something like that. So I'm going to stick to the story that I think I'm right, but we'll see. And I think my point of view is different than what you see elsewhere, be it Wall Street or YouTube. The reason that Wall Street just wants to pump you up all the time, because that's what they do. They make money by managing your money. YouTube is filled with a lot of people who are inexperienced and 20-year-olds, so they don't know. They frankly don't know. They didn't live through it. I'm just going to tell you, I lived through this stuff. I lived through the dot-com bubble. That's when I got started in these things. And we had a crazy run-up, and I'm showing you Intel. And actually, Intel has never recovered from those all-time highs. So crazy story with Intel. Could Nvidia be like Intel? Maybe. I'll just say this. Nvidia is a real company the same way Intel is a real company. They are real companies. The question is, do they become overvalued? If sort of all of this crazy hype, does it not necessarily live up to it? And we've seen this with something like a Tesla, right? That's a good example. So, but again, I'll repeat, NVIDIA is a real company. They have great market share. But does that ASML thing predict slowdown in semiconductors? We also have this as well. I want to read this to you. It says, after a 10% stock rally in the first quarter, talking about this year, the strongest start to a year since 2019. So we're talking about basically we've had this great start to a year in like 5 years. So it's been a fantastic rally. But the current situation, we're pulling back right now, right? So the geopolitical uncertainty. So that's going to be what? Iran and Israel, U.S.-China relations. And also, too, we have the Ukraine and Russia situation. We have the Fed saying, hey, maybe we're not going to cut. Inflation might be coming back. We're worried about that in USA. That's why we track all these things. And, the market's like cooling off a bit. We've been running up pretty good. And this is actually an interesting one as well, is the equity risk premium. We don't talk about this all the time, but we do mention the concept. So basically, people look around the market and they're like, okay, where can I put my money? What can I expect in the future? And if you take the difference between, guaranteed returns on bonds, guys, or throwing your money in the market, and what's the difference on the expected returns? And right now, we'll read it here, not as good as it was before. So it says the equity risk premium for U.S. equities, a measure of the differential between stocks and bonds expected returns, is now deep in negative territory, something that hasn't happened since the early 2000s. So, when people are looking at this, they're like, okay, where can I put my money? I mean, I'd rather just take that safe return. And I noticed something that's kind of interesting. We don't talk about this all the time either. The TLT ticked up today by 1%. And this tracks this is iShares. It tracks the 20-year plus Treasury bond. That's the ETF. And you can see here it's been on a downward trend, right? This has been the last like 4 years or so. This is another way to look at it. This is the 5-year chart. Again, it's been like in a downward trend. But have we bottomed out? Maybe. I've been tracking as well the dollar to the yuan, which I talk about all the time, guys, and it's like near 1,400 right now, which is insane. So keep an eye on this stuff. We also look at this as well. Again, this is all about, okay, where can I put my money? Do I want to take a risk in the market, or do I want to just go in with the guarantees? So currently, the 2-year Treasury is at 4.94%. The 10-year is at 4.59%. Also, too, this is actually really interesting that's related to that stuff. And this is something I've never really understood with, I don't say never understood, I have a difficulty understanding. A lot of like sort of regular people, they still go to the brick and mortar banks and they leave their money in savings accounts that don't really pay anything. And I thought that was kind of an interesting headline because I think people are catching on. It says, Americans sick of the 0.01 yields create new dilemma on Wall Street. So the basic gist of it is, okay, if the regular consumer realizes they can move their money to a smaller bank, online bank, etc., and they can get like 4%, maybe even high as 5% savings account on these high interest savings accounts, or they can go to a CD, these kind of things. Like, why leave your money with these people? And so, meaning the bigger banks like the Chase or the Bank of America, that kind of stuff, Wells Fargo. I don't think any of these bigger banks pay that big of an interest rate on your savings accounts. And so then these banks have to then maybe tick up a bit of money that they give on their savings accounts, but that hurts their bottom line. And this is something that I mentioned because this whole thing, if people are new to this stuff, it's all about manage your money and putting it in different asset classes, right? And the best advice always is don't throw all your eggs in one basket. That's just really the best advice. The other good advice that I always have and mentioned in my book here is bet on yourself, invest in yourself, right? Educate yourself so you understand this stuff. And if you're watching the channel every day, hopefully that helps you in doing that. So you have a general sense of what's going on in the world. And the main thing is don't panic. If you understand what's going on, you won't panic. And also, too, you'll make good decisions because you're like, okay, I get it. I get what's going on, right? And you won't necessarily get sucked into the crowd, which happens a lot in this world. Now, I mentioned my book called Positive Angle and Investing in Yourself. You could also use the word betting on yourself. But don't literally bet on yourself. And the reason why I mentioned that is that's what this guy was doing here. We never talk about this kind of stuff. I won't say never, but we rarely. The NBA, a lifetime ban for one of the players. So this was a wild story. I saw this thing and I'm like, what the heck is this? So this is a guy, his name is Jonte Porter. I have not heard of him before. Plays for played, I guess I should say, for the Toronto Raptors. And he was literally betting on himself. So or we'll put it as like gambling on himself. So I still say invest yourself, bet yourself, but don't gamble on yourself. Here's a story. Isn't this wild? The NBA has banned a player for life for gambling on the sport. I think it's like the Pete Rose situation, actually. The first time the league has handed down the maximum penalty since legal sports wagering began in the U.S. Because these days, and you guys know, like talking about stuff all out with you, those companies like a DraftKings might be other ones. I think that's an industry that probably will never go away. And in fact, maybe if the economy takes an even greater downturn, maybe DraftKings will be taking all our money. So certainly a possibility. So I guess bet on DraftKings, right? But this says here, an investigation by the league found that Jonte Porter of the Toronto Raptors had wagered on basketball games and liaisoned with at least one bettor to fix his own performance. So I think this is really the part that got him in trouble. According to a statement by the league on Wednesday, Porter disclosed confidential information about his own health and limited his participation in a game on March 20th, the same date that an acquaintance of Porter's placed $80,000 wager that he would underperform that game. Don't do it, guys. Don't do it. Don't do it. I laugh because you gotta laugh at these people. But it happens. They get greedy and maybe this kind of guy Maybe he's got like 10 Lambos or whatever, and the insurance payments are going up on his car. He's like, oh my God, I need the money, etc. It's easy money. Help my friend make 80K. He'll give me a kickback of 50 or whatever he's getting. I don't know. But just don't do it, guys. The NBA said Porter investigation is ongoing. Oh, okay. Maybe he already got banned, though, I said. But we'll see here. It says continue to share information with federal prosecutors about this matter. Or maybe they're looking for more people connected. That's what the ongoing means. There is nothing more important than protecting the integrity of the NBA for our fans, our teams, and everyone associated with our sport, which is why John Tay Porter's blatant violations of our gaming rules are met with the most severe punishment. An agent reporter did not immediately respond to requests for comment. And regarding the NBA, which hey, I got a chance to talk about sports. I was a huge fan when I was a kid. Portland Trailblazers, that's where I grew up. We lost to the Bulls. We lost to the Pistons. If you guys know what I'm talking about, you can chime in the comments. And the one thing for me to get me watching NBA again would be you got to move back the three-point line. That'd be one. Two, you got to, how can I say, let people play defense. Right now they call 2 fouls too easily. And perhaps, this would be a really controversial one, perhaps move the hoop to 11 feet. That's my thoughts on that. Anyway, let's go back to the markets here. So it's fun to talk about lots of different things. The losers today were microcap, and they were down negative 0.12%. So, essentially when markets pull back, sort of the more, less safe things will pull back first. Also, too, talking about less safe things, because even the big companies might be in trouble as well. We knew this was coming, and it's been rumored, but we don't know the exact date when the files will be, exactly here. But at the moment, here's the headline: Justice Department to file anti-suit against Live Nation. There might be an update, because this just came out like on the 15th, so a couple days ago. So when we get the actual details of the lawsuit, I'll go over it, because I think it's fascinating. I am a big fan. I'll repeat. I'm a huge fan of Lena Khan. I made a video about this. She's over at the FTC. By all means, go after these, monopolies, and I hope, as fellow citizens can rally behind, breaking up Live Nation. Who likes Ticketmaster Live Nation? If you do, you can write in the comments. I am certainly not one of those people. Also, too, we're talking about NBA, Live Nation, all sorts of things today. Utilities, I mentioned before, were the big winners today. Technology was down, real estate was down. And you can actually take a look at this. Most stuff was down. You had a little bit of dividend growth was up. And again, I'm talking about things that generate income. Now, there's something, too, I want to point out as well. This is coming from the Fed. Their Beige Book had a couple interesting quotes from it. I want to go over this. What did they say? It says here, the U.S. economy has, quote, expanded slightly. This is sort of tracking what the Fed thinks or reporting since late February, and firms reported greater difficulty in passing on higher costs. Okay. So, can you charge people more money? And when you say it's difficulty, maybe not. Quote, consumer spending barely increased overall, but reports were quite mixed across districts and spending categories. Several reports mentioned weakness in discretionary spending, so where you have choices on where you spend your money. It's like, things that you don't necessarily have to spend on discretionary, right? So weakness means that people aren't so willing to just spend all their savings on stuff they don't necessarily need. As consumers' price sensitivity remained elevated. So price sensitivity, if you don't know what that concept is, basically something that's, say, for example, not price sensitive would be something like the price of insulin, for example. So no matter what the price of insulin is, you're going to buy it because you need to get that stuff, okay? Something you might be price sensitive on would be something like cars. Or, we're just talking about chips. So for me, it would be computers. Yes, I would love to upgrade my Apple computer every single year because they come up with a new chip every single year. But have you seen the price of those things? so that kind of stuff. Like when prices go up, some products that you're like the consumers hold off, and so they have to bring prices down. So that's price sensitivity. Another frequent comment was that firms' ability to pass cost increases on customers had weakened. So if the inputs, meaning that the materials or whatever, the labor that costs to make your said goods and sell it to customers, do you have the pricing power to do that and push the cost onto them? And that goes together with price sensitivity. So that's what you track this stuff. So basically, people, regular consumers, running out of money and they don't want to pay higher prices. So stop asking. Anyway, that's what's going on in the markets today. Love to hear your thoughts on these things. Always appreciate you guys coming back, and I'll catch you next video.